7.5% they labeled. The Fort Myers Cape Coral market is dropping year over year.
And the Florida House cut $500 million out of Everglades restoration.
Cape Coral is being called the worst housing market in America.
Government of Florida loses it after Cape Coral real estate collapsed. Who knew that betting on non-stop price hikes and fragile insurance companies wasn't a long-term strategy? Apparently, not the people running Florida, but reality sure caught up fast. Cape Coral was Florida's fastest rising star. In just 2 years, home prices shot up by an astonishing 83%. Buyers from out of state flooded in, so eager for a slice of paradise that many did not even bother to step inside before closing a deal. Realtors could barely keep up. A house that sold for $240,000 in 2020 suddenly went for $430,000 just 2 years later. Locals were left in the dust, priced out of their own neighborhoods, while investors and flippers moved in by the dozens, scooping up properties and betting big on the Florida dream. Governor Ron DeSantis pointed to Cape Coral as proof that Florida was the new promised land, celebrating the record-breaking growth as if it could last forever. But beneath the glossy headlines, the market was being propped up by shaky valuations and a dangerous dose of speculation. It did not take long for reality to hit. A study from Florida Atlantic University revealed that homes in Cape Coral were selling more than 70% above their long-term trend. The typical home was nearly $178,000 overpriced, yet the flood of out-of-state buyers barely noticed. Many came from markets where prices were even higher, so to them, it still felt like a deal. Locals, however, saw the warning signs. Then came the shock that shook the entire system. Mortgage rates doubled in a matter of months. What had been a 3% loan suddenly jumped to 6%. Overnight, the math stopped working. That $1,700 monthly payment turned into $2,400 or more. Buyers who stretched their budgets found themselves out of options, and the once endless pool of eager newcomers disappeared almost instantly. The market that had looked unstoppable was suddenly running out of air. Then the hidden costs started rolling in, and they were brutal. Property tax bills arrived, and homeowners saw increases of 20% or more. These bills were based on peak values that were already slipping, leaving families stuck, paying for prices that no longer existed. On top of that, came insurance premiums that shocked even longtime residents. A policy that cost $3,500 just a few years ago now runs closer to $8,000, and that was before flood coverage. For many households, escrow accounts drained faster than they could refill them. Buyers in the middle of deals were blindsided by last-minute insurance quotes or inspection demands. Some closings collapsed completely, with sellers frustrated and buyers walking away. For the people who had managed to buy during the frenzy, the dream quickly turned into a burden. Families were forced to decide between dropping insurance altogether or slashing their coverage to risky bare minimums. Others started questioning how long they could hold on before the costs crushed them. Cape Coral, once the poster child for Florida's unstoppable rise, was now the warning sign. The boom had turned to bust, and the bills were piling up faster than anyone could pay them. Florida's insurance market didn't just wobble, it cracked wide open. Major companies like Farmers and United Property and Casualty packed their bags and left the state, saying the losses from storms and lawsuits were just too much to handle. That left homeowners scrambling. In their place rose Citizens, Florida's so-called insurer of last resort. The problem? Citizens wasn't supposed to carry the whole state on its back, yet it suddenly ballooned to more than 1.4 million policies. With every new policy, the risk piled higher. Citizens is backed by taxpayers, which means if a major hurricane hits, it's not just the company paying out. It's every Floridian with an insurance bill. Right now, Citizens is holding more than $500 billion in hurricane exposure. That number alone should make any budget analyst nervous. and Cape Coral is at the heart of it. Roughly 70,000 homes there depend on Citizens for coverage, many of them uninsurable anywhere else. Roof too old? Too close to the water? Private carriers don't want the risk, but Citizens doesn't have that luxury. For Governor DeSantis, every new policy added to Citizens is like a ticking time bomb. On paper, it's coverage. In reality, it's the state itself gambling that the next storm won't wipe out the reserves. While the insurance mess brewed, the housing market was unraveling right alongside it. Between May 2024 and May 2025, home values in Cape Coral sank by 11%. That's about $40,000 in lost value for the average homeowner. For anyone who bought at the peak, the numbers are even worse. Nearly 8% of mortgages in Cape Coral are now underwater, the highest rate in the entire country. That means thousands of families owe more on their homes than those homes are worth on the market. The for sale signs tell the rest of the story. Inventory exploded, climbing more than 50% in a single year, with over 3,200 homes flooding the market. Too many sellers, not enough buyers, and when that happens, prices don't just drift lower, they get cut. More than half of all listings in Cape Coral have already seen at least one price reduction, and some of those cuts are brutal. $20,000, $40,000, even $50,000 slashed just to get attention. Builders, once riding the wave of demand, are now dangling incentives and deep discounts just to move new homes. Investors who bought up properties during the frenzy are backing out, facing shrinking returns and empty rentals. And longtime residents who thought decades of equity made them safe are watching their net worth shrink month after month. The result is a market where nobody feels secure. Not the families, not the builders, not the investors, and certainly not the governor staring down an insurance system that can't hold. Cape Coral went from a boomtown to a warning sign, and the numbers now speak louder than any press conference ever could.
We had a hurricane, and our market still sustained, mostly from people losing their homes and purchasing homes.
Hurricane Erin was the storm Florida had been dreading. Forming over Gulf waters that were 2 degrees warmer than normal, it grew into a Category 5 monster, powered by the very climate shifts scientists had been warning about. The danger wasn't just wind and water. The real threat was financial. Citizens Insurance, already overloaded with policies, faced exposure so massive that a single landfall could wipe out its entire reserve. One storm had the power to bankrupt the system meant to protect Floridians. The ripple effects were immediate. Insurers stopped writing new policies, lenders pulled funding, and the entire housing pipeline froze overnight. Buyers couldn't close, sellers couldn't move forward, and builders saw projects stall. Cape Coral, already shaky from falling prices, now faced a complete standstill. Governor DeSantis called emergency legislative sessions, trying to cobble together fixes in real time. But there was no easy answer. The math was brutal. If Erin had taken direct aim, the financial fallout would have hit every Floridian through higher premiums, special assessments, or both. The terrifying truth was clear. One storm was all it would take to break the system. For DeSantis, the political cost came just as fast as the economic one. The governor who once bragged about Florida's unstoppable housing boom was now stuck defending a fragile insurance market that looked ready to implode. Behind closed doors, budget analysts warned of emergency assessments that could land on every property owner in the state. Citizens, once sold as a safety net, had turned into a liability carried by taxpayers. The weight of that risk wasn't abstract. It sat directly on the shoulders of homeowners from Miami to Cape Coral. Lawmakers rushed to pass reforms, but most of them were temporary patches. They could slow the bleeding, but they couldn't cure the wound. Premiums remained sky high. Coverage was harder to find, and the underlying problem, billions of dollars of exposure sitting in a hurricane zone, didn't go away. Each new storm season felt like rolling the dice with the state's financial future.
Several local communities once labeled as the poster child for cheap waterfront living during the pandemic, now being labeled one of the worst places to sell a home.
Cape Coral showed how deep the cracks ran. What started as a story about rising prices and out-of-state buyers had grown into something much larger. The housing market was no longer just about supply and demand. It was about climate risk, lawsuits over claims, and the political battles that came with every failed reform. For homeowners, that meant more uncertainty, more costs, and no guarantee that the system would hold when the next storm came. For the governor, it meant a legacy tied not to growth and prosperity, but to a crisis that revealed just how fragile Florida's so-called promised land had become. Can citizens survive the next storm? Can homeowners handle 4 times premiums? And will buyers still come to Florida? What are your thoughts? Let us know in the comments.